Hmm. Yo, welcome to Insider Trading. This is Noble. It's been a minute. It's been since like what? Before Thanksgiving was the last time y'all saw me. I hope you've been blessed. I hope you had an amazing Thanksgiving, Christmas. Hope 2023 is starting off to be as amazing as it is for me. I'm feeling really good. Really good. We got a lot to cover today. For those of you who are new, I've been trading, investing, teaching, learning, making money, losing money. I've been through such an amazing journey. It started 2008. I got my MBA. I was working at Bank of America. I quit my 6-figure job. I learned a lot about trading. Shout out to my big homie, big cousin, Joel Harrison. He was like, yo, you should learn futures. I was like, what the heck are futures? Journey of a lifetime. So I have a large body of knowledge and a gift with teaching. So I love helping people who are new, experienced, in between. It takes time to get this down. Years to master, years. I know there's a million gurus telling you how easy and simple it is. But the psychology piece is incredibly complex. It's been one of the biggest journeys of my life. Just to really hone my emotional skills to know how to actually make money from the markets. Make a lot of mistakes, a lot of stupid mistakes. So, what we're going to cover today? We're going to cover a lot. We are going to talk about, as you can see on the scrolling board, we're going to talk about the jobs numbers real quick, which came out this morning. I'll show you that, show you how they impacted the market. Do me a favor, though. Do me a favor. Because I can see people watching. I'm using a new technology. I don't even tell you what it's called. I'll tell you if you ask me, but ain't nobody gonna ask me. If you can, do me a favor real quick. Let me know where you from. Let me know where you from. Just type it in. Just type it in. Interactive. Right? I'm gonna mess with my camera just a little bit. All right. So this is like a live test run. You know, y'all know me. It's live, so you like, what are you testing? Oh, trust me, I'm getting ready to do some things. You know, I'm ready to do some things. So I'm here in Atlanta. Let me see. Somebody said, glad to see you back, man. Or woman, glad to be seen. Glad to be back. Let's see who else we got. We got somebody from Cincinnati. Y'all, that's what's up. Have I ever been to Cincinnati? I don't think I've been to Cincinnati before. Shout out to my Cincinnati folks. Somebody said Savannah. You know, I was going to go to Savannah State for school, but I ended up going to Indiana University. I was going to go to Savannah State. Why? Because I went on a college tour in like senior year. Man, I got on that campus. I saw some AKAs, some Deltas. I saw some Zetas, some SG rows. Man, I was like, yeah, I think I'm going to come here. I ain't know anything about sororities and frets, you know? But I ended up going to IU. My mom went to IU. Shout out to all my Hoosiers. Somebody said, oh, it's from the D. Detroit, that's what's up. That's what's up. Big D by the way of GI. That's what's up. Gary, Indiana. Always representing. That's where I'm from. Born and raised. Gary, Indiana. So appreciate all you guys for checking me out today. Let me see. Is this going to slowly go away, or do I got to make it go away? Oh, okay. I can make it go away. That's what's up. All right, so 2023 has started. Last year was a rough year. If you lost some money last year, welcome to trading. Welcome to investing. A lot of people lost money. There's really nothing you can do when the market pulls back as much as the market pulled back. And I'll show you today how rare last year was. It actually is really rare. Yeah, I'll show you some stuff. I'll get into that. We're going to talk about megacap tech stocks. Really the big 8. I know them by heart, but I like to write stuff down just, you know, because when you're doing this live, you just kind of tend to forget stuff, you know. So we'll take a look, not at all of these, but definitely some of these. Google, Apple, Amazon, Meta, or Facebook, previously known as, you know, formerly known as Facebook. Microsoft, Netflix, NVIDIA, and good old Tesla. Good old Tesla. I say good old Tesla because I'm in a trade right now on Tesla. It's the only trade I'm in right now. And I'm mad I didn't take a couple of these earnings trades. It was an earning trade. I'll tell you what I did. I am, okay, up 181%. I got some time on it. So we're going to talk a little bit about options too. Some of y'all are like, what the heck you mean you up 180%? You're not going to take that? No, I got a little time. And I got a target. And I'm patient. This is where the discipline comes in. Just because you see money don't mean you have to take it. And I already took some profit already, right? So I'm not going to say 200-300% return and not, right? Even if it's going, still has some time to get to my target. That's amazing. Right? So you want to always do that. Let's see. Oh, unemployment. Well, I'll show you that too. So let's do this. I'm going to hit the charts. I'm going to hit the charts. Y'all know I'm going to hit the charts. But before I hit the charts, let me do this. Let me hop over to, this is a site that I've been using for years. It's actually for foreign exchange traders. It's all the same stuff. It don't matter. It really doesn't matter what the asset is. It's just data, y'all. These charts, it's just data. Technical analysis is what it's called. For my, newbies, let me slow down for a second. So fundamental analysis, right? It's being able to look at a company's balance sheet and its earnings and their, you're really analyzing the core business, the business itself. There's tons of ratios. It's almost like high-end sophisticated accounting. And I don't even say sophisticated, but just accounting, right? You need to understand how a business works, right? You need to look at their debt, right? Price earnings ratios. There's tons of things. There's tons of things. If we start talking about the fundamental analysis, right? Is it a good company? But then the technical side is the charting, right? So okay, Apple's a great company. Those 8 that I just named are great. They're really amazing tech stocks, mega cap, right? Worth billions. But what price do you buy, right? So when you go from investor to trader, or you really should be both, right? You got to pull up the chart. You got to understand how to know when the trend is changing, know when we're reversing, know when we're in a strong trend that has a high probability. Like, where do you buy? Where do you get out, right? That's very technical. It's literally a technical skill. So we call it technical analysis. Every single chart you'll ever look at is just data. It's just prices coming in, orders coming in. Prices are moving based on supply and demand. That's all it is. Right? So, I try to break it down, keep it as practical as possible. So we are going to hit some charts. But before we do that, baby pips today. So what happened today? Well, let's look at today. This is the economic calendar for everything that happened today, Friday. What you'll see a couple red things outlined. All right. So these things outlined in red, what the heck are these? So this is average hourly earnings. And what you'll notice is down the side over here, we had a lot of stuff coming out at 8:30. A lot of reports, right? So these are reports on manufacturing payrolls, right? Manufacturing companies, unemployment. What's the unemployment rate? The forecast was 3.6. It was actually 3.4, even lower. Did the market like that or not? These things are what, for you folks who are like, you're working, you're going to school, you really don't understand all the different things that are involved in the market. There are reports that come out. They're economic reports. And investors, when we hear, oh man, the number of the percentage for unemployment was lower than what we thought, what they forecast. Is that a good thing or a bad thing? It's a good thing. So what happened? Did the market go up? Is it down? Right? All of these things affect the market. Right. And we had a lot of reports come out today at 8:30. So non-farm payrolls, participation rate, government, government payroll. So really thinking about labor. Are people working? Are people working? And what's the forecast? Right? Is the trend getting better? Or is the trend getting worse? Right. So this is just like, it really is just basic information. The more you get into trading, you'll come to have your little sites and you'll come to know, what to look at and what's important. Not every single thing is important, but a lot of these sites that are really great, like Baby Pips, will tell you if it's high, medium, or low importance. It'll tell you. Then you got to know how it may affect the market or what to do afterwards, right? That's where strategy comes in. So let me see. If I click on oh, I didn't mean to click on that one. That's not the one I wanted. Which one did I? Let me go back. So because this is a foreign exchange site, you actually got to go to filter and then select US only, because I only care about the US, or that's only market I'm trading, right? So let's see. What do I want to go to real quick? Oh, jobless claims. So check this out. Jobless claims. The forecast was 231,000. 231,000 people this week would have applied for unemployment. The actual was less, 6,000 less, 225. So the market reacts to these things. All right, the big hedge funds, the big institutions, they care about this stuff. Like, it's critically important. The whole world is watching this information. All right, that's how you know if you're, quote unquote, insider trading. Inside, right? Because these are the numbers that matter. And you have to make sure you weekly, kind of track, make sure if you're like day trading or even just, swing trading options, you still need to know about these reports. They move the market. They move prices. All right, now I'll show you a couple of these today. So let's see. You know what? I'm going to slow down. I feel I'm a little rusty. Dang. And I'm not nervous or anything, but I feel like my brain is thinking as I'm talking. Let me just slow down. Sometimes you got to do that. Just slow down. Y'all are with me. Y'all know how I get down. Okay, let's do this. So jobs. Lower unemployment was even less. And the jobless claims were even less, right? So less people than we thought. who needed a job, needed unemployment did. It's a good thing. Market's a little crazy though. Just because something makes sense does not mean it will react how you think. It really doesn't. So when we start here, and I'm just kind of like, if you see me pause for a second, I'm just like, it's some new stuff in this software. So I'm just like, I'm trying to just learn it all and practice. And I've been on this thing all week. It's amazing. It's amazing. Y'all got me in 4K now. Y'all got me in 4K. I was about to paint my office because I cleaned all this stuff out, and then it was so clean. I said, man, I got my little Govee light in the back. I said, man, this is a clean look. It's just clean. So I might still do what I was going to do. I might just leave it like this. We'll see. But let's move to a mega cap tech stock. So a couple different companies this week reported. And last year, so let me go to the charts. Last year, last year was one of those tough years. Why? Because let me go to the S&P first. Let me do that. Oh, let me take all this off. Get y'all a clean chart. Real clean. I'm gonna keep it super simple. And I'm gonna start, I'll start with the month chart. Matter of fact, I'll take this little bit of analysis off too. Start fresh. So as always, I used to do this all the time. I will still continue to do it because when you're looking at a chart, and let me slow down. Red simply means price came down. Price dropped in that month. Green means price went up, right? So let's keep this part really simple. This month right here, this big ugly red month, that was March of 2020. That was when COVID scared the world. The market does not like uncertainty. What the heck is a pandemic? People were Googling it. I had to Google it. What is a pandemic? We got to sit at home for how long? All right. Scared the world. When people don't know, man, that's when people start selling, collecting, taking their profit and whatever stocks they're on. Right. So uncertainty. Not a good thing. We don't like uncertainty as human beings. Scares us, makes us fearful. We don't like things we don't know, people we don't know, markets we don't know, and pandemics we don't understand and haven't lived through. We don't like. So the market reacted. Big ugly red candle. That just means prices on the S&P 500. This is SPX, S&P 500. 500 of the biggest, best companies in the world. Think of it like the all-star team. That's how I teach my kids. Whenever I get the chance to teach kids, all-star team. Right? That's what this big index is. So that was March. And then what you'll see is we had a really, really, really amazing run. Really amazing run. Market reversed. And we got into a really, really strong uptrend. So I don't know where you are, who you are, but hopefully this period here from 2020 to 2022, hopefully you made some money. And some smart investments. Because a lot of the stocks that people who don't know what the hell they're doing thought would be great investments, like Clorox, Zoom. Oh my goodness. It was all the COVID stocks. I was looking at people like these stocks weren't amazing before COVID. Probably not going to be amazing once we digest COVID. All right. Simple kind of logic. Matter of fact, let's look at a few real quick. Look at Clorox. I know this is a lot on the chart. Let me take it all off real quick. All I want to show you is that Clorox had an amazing run up because of COVID. And it's pretty much came all the way right back down to where we started, right? So think about that. I want you to lock that in your brain. Next time something major happens. Stocks do move like the Cloroxes. And let me show you Zoom. All right, everybody and their mama was on Zoom. Zoom did, Zoom ran up too. Made a lot of money. Could have made a lot of money on Zoom, but as you can see, it's all the way back down to where we started. Right, so when things happen, the market reacts. That's kind of the message for today. When we get jobs numbers, we react. We buy or we sell. There's a sell-off, there's buying, and that's literally what the market is. It's a tug of war between bulls and bears. People buying. Optimistic about Apple. People pessimistic. I don't think Apple has A, B, and C, right? So that is what this is, right? It's a tug of war. Solid as big tug of war. So that's Zoom all the way back down. What else? What was another one of those COVID stocks that everybody was going crazy about? DraftKings. Oh my goodness, DraftKings. Let's look at DraftKings all the way back down. What's another one? Last one. Peloton, however you say it. Big ugly triangle. Every review I did last year, I kept telling y'all, watch out for the triangle. A lot of these stocks are going right back to where they started. That's not a perfect triangle. There we go. All right. A lot of them are just going right back to where we started. And these are the companies that were not great companies before COVID. So the only reason it was very situational. They had products and services that we needed for a very specific amount of time. And when the S&P started to pull back and we started to realize, wow, we had an amazing, great 2 years, but inflation is getting higher. We printed all this money. We gave all these people all this money. We gave all these people all this money. Inflation is it's like the government getting a lot of it back or making you pay it right back out on products and services. Everything's higher. I raised prices too. Everything's higher. They kept saying we were in inflation. At least what I do have an MBA. What I learned in grad school and all the textbooks was that 2 depreciating quarters of GDP, gross domestic product. 2 bad quarters, you're in a recession. We had 2 bad quarters last year. They still tried to say we're not in a recession. We're in an inflationary period. Okay, cool. Okay. All right, whatever. Either way, do you know how to trade it? Should you have gotten out of your stocks? How do you manage through that? Myself, my cousin Joel. Let me pause for station identification. If you don't know, actually, but y'all are watching this. You're probably right now watching this from Insider Trading, which is a group on Facebook we started literally 10 years ago. But if you see this on YouTube or wherever I upload it, go to Facebook, go to search, type in Insider Trading, and join the free group. It's a huge group. It's like 30,000 people in it. Probably only a couple thousand active. Y'all know how that goes. But we do these live trainings. I have some courses I'll tell you about towards the end. I teach a lot of live classes. Actually, I'm pretty excited about the one that I have coming up because I'm actually going to combine options and futures. I've mastered this thing. I want to teach you how to trade options and futures. Different level. It's a different level. Again, shout out to Joe real quick. Oh man, shout out to Joe. I'm thinking about when I texted him yesterday and was like, yo, are you going live tomorrow in the room? I was thinking about our conversation. So side conversation. Anyway, shout out to Joe. But yeah, if you're watching on wherever you're watching from, join the room. It's free. Just a great community. A lot of good information. And we really do like keep you abreast of generally everything for the most part. All right. So you have some real traders, educated, highly intelligent, men of integrity. 2 black men. Ain't that something? 2 black men who have been in this thing for a minute. And Joe was in it before me. Right. He introduced me to futures 10 plus years ago. And I was like, what? I paper traded for 9 months. Dad passed away. Rest in peace. Pops. Left me and my sister a little bit of money, a little bit of change, as he would say, some chunk change. That was my first account. All right. So I'm here because, I had a parent who loved me enough to have some life insurance. I don't know who that's for, but that's for somebody. That's for somebody. Because y'all know how we be with life insurance. It's like the one thing you pay for that will never benefit you during your lifetime. But that's the point. Right. I wouldn't be here if it wasn't for him. It wasn't for that money that he left. Yeah. It wasn't like $1 million or nothing crazy, but it still changed my life. 25K, 50K. We split we split it. Okay. So let's do this. Let me hop back to, let me hop back here and then let's do this. Let's go back to the SPX. Let me just walk you forward real quick. That's all. Basic trend line. Basic trend line. Basic trend line. That's all this is. Basic trend line. I'll get fancy for you just for a second. Draw a little All these little points. This right here was September, right? It's generally the September and October worst months generally of every year. This right here, this ugly month, September. Look at that. Just by knowing September is historically the worst month of the year, if it's not September, it's probably October. All right. So we made this little bottom. We ran up here for a second, had a little pullback. This was the high. This trend line should have been on your chart. All right, since October of last year, you should have identified this trend line. It's one of those basics. I know it's just a little line on the chart. I've taught literally middle school kids how to use trend lines, but they can't really do anything with it, right? To them, it's just fun, right? It's colors and numbers. It's just fun. Oh, I got stuff popping up on my screen. But being able to recognize that, yeah, when we break a trend line, right, when price closes firmly on the other side of the trend line, which it did right here at the high, we closed below that trend line. And if you wanted to give it a little second, so this one actually fully closed on the other side. And then look at that. We ranged. We stayed in here for about 3 months. Why? Because all of this money and all this excitement, everybody was so bullish. Oh my goodness, Apple, everything, Tesla, everything, the world. It was the world's greatest 2-year run. As a matter of fact, let me show y'all this real quick just for a second, because I want you to understand how rare the last 2 years actually are. This is literally going back to 95? I graduated high school 97. All right. Let me do it this way. Just want to show you real quick. This trend here, look at that uptrend. All right. That was from 95 to 2001, 6-year uptrend. All right. And then we had another run here. And that was what? That was from 2003 to 2008. You know what happened 2008? Then we had this really, really, really amazing uptrend from 2010 to 2020. You missed potentially, hopefully you didn't. But that fast, we just covered the 3 major bullish markets since 95. But this one, though, after the recession from 08, or just say the bottom at 09 to 2020, really when COVID brought us right back down to this exact same trend line. And then we bounced again. But here's the thing. When you look at the steepness of this trend line, nothing else compares to it. Literally in the last 50 years. So you and I just lived through the best, most volatile, strongest 2 years of buying that we probably will see in our lifetime. And it's over. And if we get another one, I'd be surprised. But we can. It's possible. Right? It's possible. So after experiencing this amazing, amazing bullish run, just buying. Everybody buying. Everybody getting into the market. Everybody's at home. All right, everybody's signing up for classes and courses. That's why all these people you probably have seen on the internet, all these, gurus that popped up. Where are they now? Right? So we broke the trend line. We ranged for about 3 months. And those ranges are times of confusion where everybody, like the really smart traders like myself, when we see ranges, we just kind of ease up a little bit. Because there's no point in me trying to manage in a trend. It's literally bulls and bears agreeing on price so much and the value of things that we don't push up or down. We're just kind of bouncing in between really tight ranges. But somebody eventually has to win. Right? So the market did push lower. It did push lower. And actually, I want to add one thing to my chart real quick here. I know this changed up. Matter of fact, I'm gonna take the TTM trend off real quick. So all I want to put on my chart was this yellow line. This yellow line. Think of it like think of this yellow line as think of it like being playing basketball, half court. You take the ball out. If you can get to half court, you have a higher probability, you have a better chance of getting a good shot off. If you can get to the 3-point line, that's even better. If you can get inside the perimeter, even higher chance statistically. The closer you get to that rim, the higher chance, right? So think of this yellow line. It's a 20-period moving average. Statistically, it basically is in any chart or pool of data based on statistics. I love statistics. I flunked statistics, then I got an A in statistics, undergrad and grad school. Shout out to everybody at Clark Atlanta. That's where I got my MBA. So I love stats. That's all this is. Like it's can I come up with the right trade or the right investment that has a higher potential chance, the higher probability of winning, of making me money based on trend direction, right? So I'm giving you this. It's a gem, but I'm telling you, people act like the 20s just all, people get all of these really super advanced indicators. This one was on my chart from day one. Hasn't come off. It's that valuable. Because above it are all the trends and below it are all the down trends. So what do you see right here? What do you see right here? We went below the 20, and then right here we came up to test it. That was August, and then we went back down to make some new lows. So the question, I think Kramer or somebody was talking the other day about, like, oh, y'all can't even see that. My bad. That's the one tricky thing about this. If I'm talking about the chart, remembering to show you, all right. So I got to get better with that. But what I was saying is right here, right, where that white circle is we went under the 20, right? Under the 20, right? So now the Bears, we're on the other side. The other team has the ball, and they're on their side of the court. If you're a bull and we're under the 20, you shouldn't be excited. Now, don't get me wrong. If we're talking long-term investment, okay. But if we talking trading, options, futures, foreign exchange on any time frame, and we're under the 20, probability is not with you. It's a higher, depending on how much volatility we have, there's a higher chance we can go down. All the down trends are under the 20. All the up trends are above, right? So where are we right now? Let me actually go to the week chart real quick. I'll show you how smooth last year was, though. Show you how smooth last year was. Because some of y'all think last year was a tough year. And I'm not going to lie to you. From a expert and basic eye view, I'm going to just draw it. This was the high. Then we made this low. We went under the 20. We went up to test the 20. We went back down and made a new low. We pushed We pushed right back up to test the 20. Made another low. Pushed up here. Couldn't get to the 20. Made a new low. We pushed up here. Got a little bit above the 20. Came all the way back down to make yet another low. This right here, y'all. This is like classic 101 trend line down, going down. That's all it is. I can draw lines right across all of these. It's called a channel, right? When you connect these swing highs and swing lows and you draw a little picture, and it's like, oh, I'm in a downtrend. All right, so somewhere in here, February, March, if you have some basic analysis, technical analysis skills, you already knew the market was down. I've been saying, I literally posted like 10 times in the room, the market is bearish. Every time we popped up, we're still bearish. Every time we started to go back down, we're still bearish. Just trying to let people know, like, we're still bearish. The trend is still down. Nothing fundamentally has changed. I don't care who you talk to. I don't care what, who you follow and watch, in terms of like, getting your news and analysis. If they don't pull up a chart and can't show you what they're saying, don't trust them. It's ego. It's ego. There's a lot of ego in this space. It's heavily dominated by men. Y'all know how men are, right? We want to be right about stuff. It's a lot of ego in trading. It is. It's crazy. It's crazy. But that's why for me it's important to show you guys what I'm talking about. You don't have to believe me when I say we're in a downtrend. You don't have to believe me. I can show you. Right? So where are we at now? Let's go back real quick. So we are attempting right now. to get out of this downtrend. It's like we were sick all last year. You're starting to feel a little bit better. Starting to feel better. All right. We're going to talk about earnings in a second and hit a couple stocks. Matter of fact, let me check something real quick. Oh, let's see. Shayna, what's up, Shayna? She said, can you look at the SPY? Yeah, I'll look at it. Somebody said CVS. Oh, yeah, I look at CVS too. Oh, y'all could type in some stocks if you want me to, analyze a few stocks with my tools, pull them up, at a real quick glance without doing, because I'll spend like 2 hours on a chart. Like, I love this stuff. I do. But yeah, feel free to type in some stocks if you want me to, do some analysis for you. So as I was saying, we are now breaking over this trend line. We're actually officially we broke the trend line and we got this little push above it. All right. So think about it like this. This was the candle that actually closed above it. And then you want to ask yourself, okay, we pushed above it, but are we continuing? Right? Did we actually continue to push after we broke the trend line? Did we get what's called a continuation of price moving? Did people keep buying? Right? That's it. Did more people keep buying? You should feel great when more people do whatever you want to do. You want to buy? You should feel great when everybody else is buying. I don't have the number, but I think yesterday or the day before they said it was like the highest, a record number of call options. Call options are basically people who are using options to make money. And essentially a call means you're buying, you're long. You want the stock to go up. Stock goes up, you're making money, and you bought them. You essentially with options, you're buying shares at pennies on the dollar. Pennies on the dollar. We'll talk about a little bit of options too. Cause what is it? Meta. Oh, I'm so mad I missed Meta. Oh my goodness. I'm gonna show y'all how much you could have made on Metaverse this earnings this week. Now, I'm not suggesting you do this. This is all for entertainment and educational purposes. I need a little, you know what? I'll get a little what you call that? I need a little disclaimer. I got to get a little disclaimer to pop up. Cuz I probably do look at maybe more than a few other people that I, kind of watched and seen. And I do talk options, futures, and all of it, but I don't want you to take what I'm saying, what I'm showing you, what I will show you, and then next time earnings happens, I don't want you to try to do it, especially if you don't even understand what I'm talking about. All right, education first. Education first. So we'll talk about Meta in a second, because I missed that one, but my Tesla is looking good, and I'm pretty sure it's about to. Well, I'll take that back. I'll show you where I believe Tesla's going. It ain't rocket science. So, SPX, we crossed above this trend line. Finally, think about this, y'all. Think about this for a second. We've been trying to break this trend line all year. And look at this one here, right here. This was the week of 8. Was this August 15th? I mean, how could you not? Like, look at this. We perfectly came to this trend line. You got the candle that this type of candle is called a hammer. It means price push up. We got a lot of people that pushed it back down, and bears won that week after bulls started off being kind of aggressive. The candle itself is just classic one-on-one stuff. It's a reversal candle. It tells you that there's a probability, a good built-in probability based on price action, that the direction we moved is about to reverse. We came right back down. We came right back down. Classic stuff. So we are now officially, I would say, attempting to reverse. We're trying. If I go back to the month chart really quick before I hit some of those stocks, check this out. Here's the thing though. Here's the tricky part. For Noble Woods, here's the thing. This candle right here is a doji. That was May of last year. So peep this. We basically, we've had a lot. Now, don't get me wrong. This isn't like a perfect range, But we hit the same high that we hit in May and August and then went back down. So we're about to, for the third time, probably, all right, try to test that same place. And what did I tell you about the 20? The 20 is the equator. This is the key right now. And it's in a simple basic, right? I could go much more advanced, but simple basics, right? We're definitely not bullish if we're not above this, right? And this is like longer term chart. So this is month chart. This really is thinking more like an investor, right? And for fun, let me just go take you back real quick to the recession and what happened after. Look at the recession. We went under the 20 and we stayed under it. And that was the worst part of the recession, was when we went under the 20, went up to test it, couldn't get above it, and just crashed. And then we slowly came back. We got above it, got a little pullback here. And then the market said, oh, we back up, right? So even all in here, and I know this is kind of crazy to say, but like this was almost, what was this? This was October. From October to November. It was like a whole year where the market it wasn't in an uptrend. This was like I don't think y'all understand how long some of these like moves actually take. Like we're constantly every day, somebody's guessing, are we up, we down? Like it's like, y'all, you have so much more to learn if you think markets reverse in like a week or two. Some of y'all bullish this week, next week you bearish, the next month it's like the market don't even move that fast. Like it doesn't fundamentally change direction that fast. It doesn't. All right, so that was a whole year. Then we started to establish some higher highs, pull back, higher highs, pull back, higher highs, pull back. Now we just cruising. This is when you should have been, right? Higher high, pull back, higher high, pull back. Amazing 2 years, really strong, right? Ooh, went under the 20, right? So all the way till here. So for me, yeah, we're trying to reverse right now. There's definitely going to be, your favorite stocks are going to be moving. They're going to be moving up. And everybody and their mama's going to start telling you how they perfectly bought off the lows. And, oh, man, I caught this bottom. And that's cool. Look, that's totally cool. And if we're talking investing, you really should be investing every month. I mean, dollar cost averaging just works. You really don't have to do all of this you don't have to be that advanced when we're talking about investing. It's like you want to buy some shares every month. I've done the data. Even if you go back and look at like NASDAQ, QQQ is the ticker symbol. If you go back and run a scenario to say, well, what if we can go all the way back to the recession? What if I stopped investing during the worst part of the recession? What if I just stopped investing? Right? What if I stopped? Because everything was going down. So why would I keep buying? What if I stopped? And then what if somebody else started here when we started to get bullish? And then what if somebody else, just kept buying the entire time? Right. And then scenario 3, what if somebody perfectly started buying at the bottom? Here's the crazy part. The percentage difference you'd have now today, regardless of which of all 3 of those scenarios, it legitimately did not matter when you did whatever you did. The percentage is very small, literally like less than 0.5%. All right. So, I try to be very empirical data, based, supporting everything I say. We start talking investing. If you love Apple, should have been buying. You keep buying. You buy every month. Just like you pay your mortgage every month. You're building equity in these companies. Right? That's the long-term view. So, but as a trader, different ball game. Right now, I'm looking at this 4,300 level. And we got to get through this 20. That's 4,200. So 4,200 to 4,300. And there is where I'm really like, I want to see what the market does when we get here. Because if we get here and can't get above it, that's not good. But we are reversing right now. So that's a good sign. Good sign. Because I know a lot of y'all have been, I know. And I haven't done like a lot of The year before, I did like a ton of consults, a couple hundred. I had like 3, 4, 5 every day. And I got burned out. So I know most people, just like you, most people are trying to learn this game. You know, they're getting those fundamentals down. And it takes time. I don't care how amazing the class is. I think mine are literally the best you can take. I do. But it's going to take you years to like really cultivate the skill set, the discipline, like to fully become an investor and a trader and make all of this just normal, as normal as driving, right? Or anything else that we think is so risky, right? You can die driving, somebody getting, like that's a real threat to your life. People fear this. And it's like, it can't kill you. At worst, you could just lose money. And that's, don't get me wrong, that that touches nerves, but you know, it shouldn't actually scare you from doing it, you know? So that's why me and Jolly Joel do what we do. Okay, so let's look at some tech stocks. Let's take a look at some tech stocks. Turn this off for a second. And let me start with Meta. Which is good old Facebook, which we're on right now. Ever thought about buying some Facebook? Have you ever thought about it? That's the question. Thought about it. So they took a really, really hard hit. All right, I'm gonna just show you COVID, which is where this blue line starts, all the way to those COVID highs. So let's see, how high did we run up? Meta, Facebook ran up, what percentage was that? 177%. And then the triangle came all the way back down to where we started and went even lower. We dropped, I can't see my percentage. We dropped 78%. Just say 80%. That's crazy. So we went up 180% post-COVID. Hit those highs. The market started struggling this really, really bad month. It was some really bad earnings that month. It was bad earnings. I believe. I'm pretty sure it was bad earnings. When you see huge candles, market just dropped, it's probably that they missed their earnings. You know, they were forecast to make X. They made a lot less. The market doesn't like it. Consumers are losing confidence. I told you, we don't like uncertainty. I don't know why y'all didn't hit y'all numbers. I'm uncertain. Shares being sold. Bears, people on the other side selling. Happy. You can make money when markets go up or down. It's kind of advanced. It is. Most people don't really understand that you can, but you literally can. That's the point of trading, right? You can make money any day. I don't care how the market moves. I just want it to move. I literally don't care whether it's up or down. So where are we now? Well, let me do this. Let me go to an hour chart real quick. And I'll show you this. So this huge candle right here, this was earnings 2 days ago. Today's Friday. This was a Wednesday after hours. So Facebook had gotten beat up really bad. I'm proud of them. I feel great as a trader. Facebook, and I don't like actively trade Facebook. But man, I wish I had paid attention to it for this week. I just got back home, getting settled, painting, and I've just been doing a lot of stuff. So I wasn't, I haven't been super focused on options other than my Tesla trade. But, and I'll show you that one too. But yeah, so if you had bought call options. Let me see. I don't want to show you this one though. I want to show you this one the right way, because the number is gonna blow you away. Matter of fact, let me say this real quick. For my people who do not trade options, I just want to give you really quick. I'm gonna give you a reason just to think about why so many, like millions of people trade options, and then it just becomes a normal part of their life and way of making income. Options is amazing. I'm gonna show you something real quick. I'm gonna tell y'all something. So let's see. I'm gonna go to the day chart. All right. So for my folks who know, we were at the 200 period moving average. When we hit the 200, we gotta move. We don't just sit at the 200. And even when we do for a while, then we're moving off of it. It's like a key area for support or resistance. Right, it's one of those points where the market loves the pivot. The 200 is so key. All right. So first of all, you should have knew the 200 that we were testing the 200. Check this out. Last time Meta was around the 200, what happened? Pushed up to it, kind of bounced around, and then big drop. All right. Big drop from the 200 all the way down. So we haven't touched it since what was this? January of last year. So it's been like a year. All right. So we were there. Let me zoom in a little bit for you. So Wednesday, imagine this. Wednesday's earnings. You know earnings are coming. You really don't know which way earnings are going to move. You really don't. So let me throw out some things with options, because options are amazing. This is what I teach in my class. If you believe that that earnings are going to go up, that the price is going to go up because they're going to have good earnings, you can buy call options, pennies on the dollar. It's literally like buying shares wholesale. And I'll explain just a little bit more in a second. But big move up. We closed at 153. The next day we opened at 183. When a stock jumps $30 overnight, y'all, $30 overnight, ooh, like that's not 100% return. We're not talking 200-300. We're really talking like stupid money. And I know some of y'all just love crypto because you just, and I'll be telling people, I'm like, yo, I know some of these, cryptos, when they go crazy and the Doge coins and all these crazy wild things happen. Yeah, they make thousands of % returns. But you do realize that happens with options like all the time. You do realize if you really want to like be able to make large returns, you can do that with stocks you love and use all the time. All the time. That's not even special. It's really not. All right. So that was one way you could have made money. You could have bought calls. Now, if you believed it was going to drop and you bought puts, you believed it was going down, ooh, you'd be down right now really bad because it jumped up when it gets you. But here's the thing that most traders don't know trading options. And I had such a good time in this last class that I started, October? It was an 8-week class. We really went like 10 weeks. But live class, live teaching. But I showed them how to trade straddles and strangles as well. What the heck is a straddle and strangle? Man, did you know with options you can go both directions? You can go both directions. You can't do that in futures. You can't do that in foreign exchange. You can't do that in crypto unless they got some weird exotic crypto I've never heard of. Can't go both directions. But there are some strategies that literally are non-directional. If a big move happens, your calls would have made you a lot of money. And even though your puts lost, you can limit and control how much they lost. So you still can make money either way. Either way. So for fun, let's do this for fun. Should I do that? I'm gonna throw these on real quick. I'm not even going to tell you what this is, just because I'd have to explain it. This red line, really important. It's basically at 173. Let's just say 170. All right. So if I could go back in time, which I wish I could. I got to grab it real quick. Hold on. My bad. Y'all didn't see that. That number. Let me show it to you one more time real quick. What's up with Meta? Okay, there we go. So these lines right here, they're pivot points, but they're like a specialized, very unique type of pivot that you can customize, blah, blah, blah. This one right here, high percentage chance that we, if earnings really moves us, that the day before we would jump up to this pivot or go back down to this one, right? So 120, 170, real simple, right? Here's the crazy part. I think I got to go back. Where is that? Where is it at? Hold on. Let me show it to y'all this way. I gotta show you this. I really do. I gotta show y'all this. Hold on. Let me grab Yep. Hold on. Let me grab the contract, because I just want to show y'all this. Yeah, it's gonna blow y'all away. It's gonna blow y'all away. What did I say? 170. That's what I said, right? 170. Okay. And let me go to a day real quick. All right. Let me move that back out the way. Come back here. Okay, cool. All right, so check this out, y'all. Uh-oh. I lost my screen. Oh. New software. I told y'all I'm learning. Hold on. Got to make this work though. Where'd it go? Oh, okay. Got it. I need to move this screen. How about this? Give me a second, y'all. Hold on. It's like, hold on. Oh boy, that killed my whole energy. Golly, I'm gonna figure this out. Hold on. I just got too many screens up. You know, you can have too many screens up. That's all that's happening right now. Here we go. All right. Phew. Okay. Sheesh. All right. You waited. I'm glad you waited. Glad you were patient. So check this out. This is if I believed price was going up to that line that I showed you already on your chart. All right, something you could study and learn from people like me who tell you, teach you kind of why, what stocks to use, indicators, mathematical tools like that to help you know where price is going or has a high probability, statistics, right, of going. So if we had bought that contract the day before, right, how much did it cost? At the end of the day, it was $1.45. So think about this. Facebook Meta was actually, let me do this real quick. It's $153 per share. Through options, you would have been able to purchase in a contract. It's almost like I always use the Dasani water like in a case. Right? If you buy a case of water, there's way more bottles. They're much cheaper if you buy them in a case from a wholesale place like BJ's Club, Sam's Club, Costco. Right? If you're at Target, you super thirsty and you just buy a bottle of water, they're gonna charge you $2. When you could have, if you were more patient and knew how to shop, you would have went to Costco. And instead of buying one bottle for $2, you would have bought 32 bottles for $5, right? So they're much, much cheaper. That's all options is. It's wholesale buying. It's just much cheaper. All right, so that contract that I showed you 2 seconds ago, I'll pull it up again. The stock was $145 at the time. But to purchase the contract was $1.45 per share. So think about that. Instead of paying $145 per share, you could have paid $1 something per share. You pick a certain amount of time, you give them a certain amount of time. This would have been like an options play. You're expecting the earnings to move the market, to move Meta, and it did. All right. So If at the end of the day you would have purchased just one contract, let's keep the math real simple. Just one contract, just one. The very next day when you woke up, the contract price would have changed from $1.55 per share, right? So, or times 100, right? So $155 to purchase this one contract. The next morning, they had jumped up to $18.77. That day, they went as high as $26.54. All right, so let's have some fun. $26 divided by, let's just say $1.50. That's a multiple of 17.3. That's a 1,700% return. That's a lot of money. Potentially. Even if you just bought one share. Just one. I mean, one contract, which you should always buy more than one share, one contract, but still. That's 155 times 17.3. Yeah. That's $2,700. And it just came from you understanding options really well. And this happens all the time, which is why I'm mad I didn't do it. Because I did do it on Tesla. Matter of fact, let's look at a few other stocks real quick. Let's take a look at Apple. See where we at. Matter of fact, let me take all this off my chart. Go back to a clean chart for y'all. So Apple right now. Oh, you know what? I did have a 20 on there, so I want to keep that 20 on there for y'all. Real quick. Okay, so where's Apple? Apple pretty much before earnings, and let's do the same thing with Apple. I'm gonna go to an hour chart. And I just want you to see. So check this out. Apple's earnings was yesterday at the close, after hours. Actually dropped. I didn't look at the numbers, but that initial reaction isn't always so. I'm assuming the numbers were good because that first initial drop doesn't always mean it's gonna work out. This was it's after the market is closed. All right. So we woke up and market closed here. All right, so we opened here and pushed higher. So if you bought some calls, you thought Apple was going to do really well. You thought earnings were good. You know, you woke up this morning a little like, ugh. But that was really because of the jobs. Right? That jobs report. And let's have some fun. Flip over the futures for a quick second. I got all this stuff on my chart. Let me get all this on my chart. Was outlining some stuff for a student yesterday. So what you'll see here, I want to go to a 30-minute real quick. Is this was this morning when all of those earnings report, the jobless claims, the non-farm payrolls, the government payrolls, all of those reports came out 8:30 this morning. All right. So these reports are a little tricky for day traders. A little tricky. I'm going to show you how today has been. And so we started off, real big drop at 8:30. You can see that one big candle. Whenever you pull up a chart, you see one really big candle like that, you got to investigate. Something happened there. There's a reason that happened, right? There's a reason that it happened. Market opens up. We got above the 20. Look what happened. We pulled back, perfectly hit the 20 and went higher. Very classic. Very classic basic stuff. We got up here, range for a while. All right. Market does this all the time. We'll get a real strong push up and then we'll range all day. All right, so all in here. We hitting this high. We came right back down to this area. We trying to get back up. Ugh. All right, coming right back down. Right back down to these same lows. All right. So, interesting day. Interesting day. You know, market was really bullish this morning. And it changed. It totally changed direction. That's why trading is way harder. It's more intellectually, you need more skills. You literally have to be smarter, more disciplined, have a greater desire to make, I don't say greater desire to make money. The trends change a lot faster if we talking intraday. All right, so if you're new and you're watching this and you're like, man, I want to be a day trader. Do you? What does that even mean? No, you just want to make money. All right, this is data analysis. This is like mastery of self on an emotional level I can't even explain to you because you're literally watching your P&L go up and down. The emotion of seeing, oh, shoot, I'm about to make money. Oh, no, I'm about to lose money. Like, that's the hardest thing about trading. That's the hardest part. Right? It's the mental skills, the mental discipline. And then with trading specifically, I guess I showed you guys longer term stuff. The longer term, right? So longer term stuff is kind of simple. You know, it's like we were in a 10-year uptrend, 11-year uptrend on the S&P. 80% of all companies in the stock market are basically correlated to move with the S&P. All right, so for the last 2009 to 2022, we really only had one trend direction. And then last year we changed direction, and now we're trying to reverse to get back into a truly bullish uptrend. That's like 13 years, right? Two trend changes. Intraday, man, we'll change direction 2, 3, 4. Sometimes we'll stay all day, but that's not the majority of the day. Intraday stuff, we'll change direction 2, 3, 4 times. Easy. And you have to really be sharp and accurate and disciplined and not thinking and just executing and have a process. So a lot to learn, if we start talking about trading, but any questions? Let me ask y'all that real quick. Any questions? Any questions? Oh, somebody asked me what chart am I on? My bad. I got to learn this software a little bit better. When I get a comment or a question, it doesn't it should do something to show me. So I should, I don't know at what point I was showing that when that question was asked, but what chart am I on? I was looking at, I think the majority of my time in the last 20, 30 minutes was S&P or the SPX, which is the S&P 500 index. Oh, let me do this real quick. Shayna, if you're still there, I know you asked me about SPY. So SPY is a cheaper version of the SPX. It basically is mirroring same price action, virtually the exact same moves. It's an ETF, an exchange traded fund that essentially mirrors the core price action from the S&P. S&P is just the numbers. It's just the numbers are different. It's more expensive. You can trade options on both. You already know which one is more expensive. S&P, SPX, right? SPY, a lot of people use to accumulate shares, essentially of the S&P to put in their portfolio, build it over time. So I don't know what's up with I typed it in like it's futures. So Sheena, when I went over SPX, I'm virtually going over SPY. It's the same thing. Same thing. So we're close to the 20 on the month chart. Not there yet. Got to break through this 430 area. So think about that. On the SPX, that key area is 4,300. On the SPY, it's 430. It's a 10th, right? It's a 10th of the buying power of S&P. It's just cheaper. It's cheaper. Same thing. Can't afford the SPX? Buy the SPY. And why would you buy the SPX? Now, some people, trade it for a specific reason. It truly is the market, but. And I can make an argument either way, but so I went over SPY by covering SPX. Oh, I did it again. I didn't show y'all the chart. My bad. Same chart, same exact chart. Broke the trend line, trying to get above the 20. 430 is that key area. Right? So, same basic flow. So, I hope you've learned something today. If you need some help getting started, shoot me a message. I'm getting ready to do probably a series of webinars, go a little bit in depth, teach some things, give you guys some meat, some things of value. And I got another live course that'll be starting probably I gotta define clearly, schedule the dates, but mid-March, and I'm gonna teach you how to trade futures and options, both markets. Why? I love futures for day trading. It's faster. If you can be disciplined, it's amazing what you can do. And the math is really simple. Options, you can't calculate options in your head. There's too many factors. It's advanced calculus. I can't calculate the numbers in my head. I know what to do. I can read a chart like a pro. All right. So I use options for longer term, what are called swing trades, holding overnight for weeks, for months. Right. I use options for that. But then for my day trading flow, I use futures. Same basic core things, though. You really can learn both at the same time. I'm amazed at how many people are like options traders. I'm like, you can't trade futures? You can't trade Forex, but you can trade options? Well, you trade futures, but you can't trade options? It's like master your craft. Master your craft. That's why you get into this, to master every aspect of it. And you have the rest of your life, and there's always something new to master and to learn. And there's always another day coming and more earnings plays coming. That's why I'm not mad that I missed Meta. Not mad that I missed out on this easy overnight 1,600% return. It'll come back around. There's earnings all year on all of these stocks, 4 times a year. So, thanks for checking me out. Once again, this is Noble. Subscribe to the YouTube channel if you're watching on YouTube. It's Just Being Noble. If you are thinking about a class, or you're like, man, I need some help getting started, or I'm in advanced or semi, experienced, but Noble, I need to get sharper, better. Or maybe you know options, but you really don't know futures, or you know futures, but you really don't understand options. I got something for you. I do. I love what I do. I love helping. And it's been an amazing journey that's only getting better. So, thanks for checking me out. That's about it. Thanks for watching. I appreciate you for being here. I really do. Let me see. Oh, I'm trying to click these. Somebody said, what up, joining late. Happy Friday trading. Happy Friday trading, for sure. Don't forget to put up the video on class on how to exit. Yeah. How to exit. You said you knew how to exit the other day. But I got you. I know. Y'all know how my brain be. It be all over the place. All over the place. I have any other announcements? Let me check my little list. Make sure I hit everything. As a quick little bonus, just want to show y'all Tesla real quick. Tesla, we'll go to the day chart. All right, so Tesla, this is a good old 200 period moving average. It's at 230. We're at 190 right now. I might get a little pullback. I got some time on my contracts. I think we can get up there though. And if we don't, that's cool, because I already made profit on most of them. So, all about the discipline and the logic, having some tools, right? Some processes that you always implement when we're talking about money. See some money? Yeah, you can always pay yourself. You always buy more than one contract. Just certain things you do, money management principles. So, thanks for watching. And I appreciate you guys. And I'm out. I got to figure out how to close this thing out now. Oh, matter of fact, last thing. Officially this year, because this is a podcast, but I haven't given you guys the type of consistency that I want to. So I got a lot of things coming. This will become much more routine, along with a few other things from me. So stay tuned. Thanks for supporting, and thanks for rocking with me. Peace.